Welcome to Markets Now. I'm Michelle Rook with Kent Beadle, Paradigm Futures. Well, grains this morning, we tried to start off just a little bit better in corn and wheat futures, but now just about everything's lower except for a few wheat contracts. And over in the livestock, cattle are seeing pressure. We started off better in the hogs, but have turned mixed. And Kent, we've seen a lot of farmers selling, pressuring these grain markets this week. We're into option expiration today. Are we going to finally start to see maybe some of this farmer selling back off or not?
Well, I think we will. The selling that we've had is not selling that they would have preferred to have made,
No.
but there were significant quantities of basis contracts that elevators required them to price either by Friday or at the latest by this upcoming Wednesday, and I think we've gotten through the majority of that. I don't know that the farmer rolled an awful lot of those contracts. I suspect they rolled some. There has been some pressure on the March May corn spread, over the course of the last couple of days as this situation kind of winds itself down. But we can look at open interest and see that open interest has been rather flat over the last week and a half. So pretty sure that we aren't getting new speculative selling. We may be getting some, but I think that the key to the price action over these last 5 or 6 sessions has been grower pricing of basis contracts primarily.
No doubt. The funds piled onto that too. And of course, we've scored new contract lows almost every day this week. We had exports out this morning. You believe that demand has been holding up. It's that we have a supply problem right now.
That's correct. If you just look at the pillars of our demand base, export sales are running 32% ahead of a year ago when the USDA export estimate is 26.5%. We have added $20 a head to hog production since the 1st of January. We have relatively expensive cattle still, and cattle cash markets have been going back up. This is a recipe for heavier weight animals, and I believe that over time you're going to see that play out when we look at stocks reports. But we only get one read of that once every 3 months, so it's difficult to trade something like that every day. And then the other pillar of our demand base has been renewable fuels and ethanol, specifically in corn. And we had another very good week of ethanol grind. We are tracking at a pace that's certainly at and maybe ahead of what we need to grind to hit USDA estimates. So the people who would argue against me say, well, we need to have enough incremental demand over and above that in order to make the prices bottom. And all I can say to that is, when we make tops, everything looks the most bullish, and when we make bottoms, everything looks the most bearish. And we're not seeing that we have enough demand to incrementally increase those balance sheets by enough. But the truth is, we do have a potential significant amount of demand, and that will come from the large speculator who will have demand from futures when we get to a point in time and a price in which there are no more sellers, and we may be closer to that than they think.
Yeah. And funds are probably, if not near, maybe record short now in the corn market. What about soybeans? We have hit some new lows here now, took out the May lows. We had a market year low for exports, and you've got Brazil basis levels still below the U.S. And so this is not a good combination, is it?
No. Let me touch on the Brazil basis levels below the U.S. It's February, okay? We don't have years where Brazilian basis is not below the U.S. in February. The truth is that you had a fairly sizable 2-week rally in Brazilian basis levels. And while there's been some reports on social media that those levels have backed off a little bit, the posted values that I see on my DTN have held together pretty well this week. It is true that we did not have a good week of export sales this week. It was a marketing year low. We should note, though, that we did not actually cancel any Chinese business in that export sales report. What we did do, not just to the Chinese, but to a lot of destinations, is to move unknown sales into the actual categories of the destinations that are going to take the soybeans. And I don't think it should be that big of a surprise, given the number of countries that had some sort of holiday last week, that we might have a soybean number that was a little bit lower than expectations.
What is your sense of why the market will not react to these lower estimates, private estimates on Brazilian beans?
Primarily because the USDA doesn't seem to want to pay attention to lower estimates from the private entities, and in fact, last year didn't pay any attention to the estimates from the public entities. In other words, the Argentine government, the Brazilian government, who had Brazilian export or Brazilian production, excuse me, significantly lower than what the USDA is currently printing, and also has had Argentine production higher than what the Argentine government was printing. So they like to back into numbers, and they just have made a different decision and they have, I think, in Brazil, maybe 4 of the last 5 years ended up printing significantly higher production numbers for Brazil. And so right now the trade just thinks that, well, these private estimates don't mean anything because the USDA isn't going to follow.
Gotcha. Wheat market, as we have started this broadcast, is moved lower now. And we did have kind of poor weekly exports there. Russia, EU prices, they're all under the US, so we're not competitive. Is that going to continue to hold this market back? Or do you think technically this market, at least Chicago's trying to turn?
Well, technically it is trying to turn. We had a key reversal higher on Tuesday. We were 10 lower on Wednesday and ultimately closed the market higher. And yesterday we ended up closing unchanged, while corn and soybeans, were making new lows. So wheat is trying to do a good job and trying to turn technically, but we have some hurdles that we need to get above. The 50 and 100-day moving averages are right above the market at just a little over $6. Last week's high, I believe, was 602. If you could post a close above 602, you'd have a weekly key reversal higher, and that would be really strong technically. But at the moment, we're down a little bit in sympathy with the corn and the beans.
Yeah, that makes sense. Total sense. Cattle market. We're going into the cattle on feed report this afternoon, which is arguably going to be very bullish on the placements category. But have we priced most of that in, or is this some caution or profit taking heading into that? The pressure
Yeah, and actually, as I'm looking at the cattle as we speak, they've actually moved their way higher again.
Are they? Okay.
Yeah, actually, all of the livestock is higher this morning. The cattle on feed report is expected to be supportive, and based on inventory numbers that we've had previously, we're fairly confident that that the situation for cattle is probably going to be supportive for another year. We had to liquidate out a really large, long speculative position, and that gave us the break that we had. But things have been working their way a little bit higher, and ultimately, given the numbers that we believe are out there, we think that this is a market that could keep moving itself a little bit higher still.
Yeah. It looks like we're getting buying on the breaks. That's always some good news. We'll see. The other thing we're watching is where cash trade develops for this week, and we haven't had a whole lot of that.
Right.
As you mentioned, hog market to the plus side here this morning now again. And we were looking for that revision from USDA on pork exports. And of course, they took the China and Mexico business out of last week's report, right?
Yeah, well, a portion of it anyway. And so what's interesting is that when the USDA made that announcement earlier in the week, it triggered some selling in the hogs, but then the market essentially came back. And we were expecting something like this morning. We got exactly what we were expected. It gave us a lower open, and now the markets are moving higher again. So, unlike the grains, which can't buy a break and can't rally on even modestly bullish news, we can't seem to get the protein markets to go down on bearish news, and that's actually a pretty good sign for those marketplace.
Yeah, and of course, cash hogs and cutout values have been moving higher this week, helping out too, right?
Yes, and of course, we expect to be moving higher seasonally right now, and
Sure.
all of those things are happening. But that's a market that's acting very, very good and stronger than many people would anticipate, because unlike the cattle, our slaughter numbers continue to be, quite strong.
No doubt. No doubt. All right. Thanks for joining us, Kent Beadle, Paradigm Futures. And remember, futures and options have substantial risk and are not suitable for all traders. And that is a look at markets now.